open in 2 minutes. The Dow's down 30, Nasdaq's down 10. Show me the 10-year Treasury yield, please. It is down at 4.70%. Eddie Ghabour with me now. Look, yields on Treasuries are still at historically high levels. Are you predicting a stock market sell-off before the end of the year?
Stuart, look, I would argue the sell-off has already started when you look at what's happened since the end of July. We've erased a lot of the gains from the summer. And if yields go up and continue to go up, I think you're going to see more downside. And we're at a very critical juncture right now. The biggest short-term target I'm looking at is inflation next week. If that comes in hot, you could see the 10-year spike back up. And if we breach 4,200 on the S&P, which is a critical point for us, I think you could see it quickly go to 4,000. So being active and staying cautious, I think right now is something that investors need to do, because just staying diversified and doing nothing has not worked for the last 22 months. And it's not going to work, in my opinion, for the next 6 months.
Well, on the left-hand side of the screen, we've got the 6-month Treasury yield at 5.56%. Again, Eddie, I don't see what's wrong with that. Tell me where I'm wrong.
You're not, Stuart. We have well over 70% in short-term money markets that are yielding nearly 5%. Investors are getting paid to wait and be cautious. I don't understand why you need to try to rush in and be a hero. If you're early to the start of a bull market and you're wrong, you could be down 10 to 20% from here. So I'd rather be late than early to protect my client's capital, because that's my #1 job as a fiduciary, in my opinion.
Okay. I'd rather be late than early. The great Eddie Ghabour. All right, I'll quote you many times, Eddie. Thank you very much indeed for joining us.